Yo, so this is basically how I predicted gold to reach all-time highs from the 15th of May to the 19th of August using the Wi-Fi money concept swing trading strategy. So yeah, basically we have the whole rules, the concepts, everything listed in front of us right now. So yeah, man, I'ma just get straight to it. Basically, for the rules, it's very straightforward, simple. Follow the trend and then target your opposing liquidity points, right? So to follow the trend, you just use your eyes, man. Like, where's the market going? If you're looking on the daily or the 4-hour time frame, is it going up? Is it going down? And then yeah, you just stick according to that. So if you have your higher time frame bias, your higher time frame trend, then you're most likely to win because higher time frame power, higher time frames hold higher power, right? And then in terms of targeting opposing liquidity is if you're taking a sell, your opposing liquidity would be the lows, and then vice versa. If you're taking a buy, you're gonna target the highs. And then yeah, man, for the concepts, liquidity sweeps, market structure shift, CISD, and a fair value gap. So since the CISD is the only thing I haven't explained on this channel, I'ma just explain what it is throughout this vid. So basically, a CISD, it's the move that takes out the liquidity. So I'ma just draw out a bearish and a bullish example for y'all. Yeah, so first we have a bearish example, right? So here we have this high, price pushed up, we swept the high, and then when market structure shifted to the downside, and then obviously we'll see price retrace back into it, and then go to the downside again. So the move that took out this high over here started when price created another low over here. So price went up, it came down, and then we had another low here, and then that move that took out the liquidity started at this low, right? So if price didn't create this low here and just did something like this, like just pushed up from this low, then the CISD would have been at this level because that's where obviously the move started that took out this liquidity, that high over there. But yeah, so the CISD is here at this low, and then the concept that confirms the CISD is a market structure shift. So obviously after price swept this low, it came down, market structure shifted here, and then around this levels where the CISD is at as well. Okay. So the difference between this is it's the CISD you draw it out by the body, and then the market structure shift you draw it out by the wick. So I'll show you how I do that just now when I basically break down the setups and whatnot. So yeah, market structure shift CISD around this level, and then like I said in the other video, 95% of the time you'll find a fair value gap form after the market structure shift, right? So then I pair them all up together because most of the time the CISD is around the 50% of the fair value gap, which is where I take my entries from. And then take an entry. Now you have the liquidity sweep, you have your CISD, and you have your market structure shift, and you have your fair value gap. You have 4 confluences in play. Okay, then obviously you target the opposing liquidity. Then same thing applies for the bullish example. Price came down, we swept this low, and then the move that took out that liquidity started at this high here, right? Once again, if price didn't create this high, then the move would have started here that took out this low, but the price created this low for us, saying that the move started here, we took out this low. CISD is at this high, Then, as you can see, price pushed up, we closed here, meaning that we did have a market structure shift to the upside, and we confirmed the CISD. It's not invalid anymore. After the market structure shift occurred, we're at the fair value gap, and then obviously we can expect price to come back, tap into the CISD and the fair value gap, and then we target the opposing liquidity points. Pretty simple, guys. Wi-Fi money concepts is not that hard to understand, man. But yeah, so CISD is basically short for change in state of delivery, and it's the move that took out the liquidity. You draw it out by the body, not the wick. That's the difference between the CISD and the market structure shift. And yeah, if there's no market structure shift, the CISD is not valid. Okay, but yeah, let me just get straight to explaining the strategy, right? So for the first setup that I sent in the beginning of my group, right, I could just see that price was in a bullish trend from basically this low here. So obviously in my head I need to follow the trend to basically be on the good side of things, man. Then I saw that price created this low here. We pushed up, we came down, we swept this low. After we swept this low, let me just delete everything so we can start from scratch. So hold on. Yeah, so uptrend, we had this low here, price came down, swept that low. After we swept the low, price pushed up, giving us confirmation that we're gonna continue the bullish trend. Then we close above that high. So here's how you see the difference, right? So with the market structure shift, I drew it out by the wick. With the CISD, I drew it out by the body. So that's basically the difference in how you draw the CISD and the market structure shift out. So after the market structure shift, we have the fair value gap, and then obviously we can see that the CISD aligns with the 50% of this fair value gap, and then entries at that level, and then we target the opposing liquidity, which is this higher highs. And then yeah, I had a few TPs. I had a TP1 and then I had a TP2, and then obviously TP3 was the final TP. Then I remember I had to send a re-entry for the new guys that joined the group at the time, and then I saw basically a similar setup using these confluences and these rules, right? We zoom in, we had this low get taken out here as well. We had that sweep there, and then after the sweep, we had a market structure shift to the upside. That move that took out this liquidity started at the open of this white candle, this sell candle over here. We draw out the CISD. Then after the market structure shift, we had the fair value gap form, and then we obviously take the trade on the touch of the 50%, which is around here, and then just do the same thing. You target the opposing liquidity points, and then yeah, you just let it play out. Same thing with the most recent one. I hopped on my chart. I still had my idea and my goal in mind for this all-time high to get swept. So I hopped on my daily time frame once again to get a proper setup. This low got taken out over here, and then the candle that took this low out, that swept the liquidity, started at the open of this sell candle over here. We draw out the high, we draw out the CISD from the open, and then obviously the CISD was invalid until the market structure shift confirmed it by closing above this high, this black candle over here. After the market structure shift happened, we then got a fair value gap that formed, We took the entry on the 50% level, and then we let it rip out again. Then finally all the TPs got hit. So for this setup here, actually what I did was I could see that price was playing around this level for like a whole week, almost a whole week. So I could tell just by that movement and price slowing down around this level, it wants to push deeper into this fair value gap. So I moved from the daily time frame over to the 4-hour time frame, and then I saw this fair value gap on the 4-hour time frame, and then I adjusted my entry to the 4 hours 50% level, which is around this point here. And then the entry was basically just more precise. Then we held, man. But yeah, that's basically how we do it. Follow the trend, target the opposing liquidity sweeps, market structure shift, CISD, fair value gap, and then patience, man. You just let it rip. No matter how long it takes to get to you, you just keep on waiting, man. For this one, I waited 2 weeks just for it to get to the setup. This one, 2 weeks as well, or 2 weeks or a week, I'm not too sure. But yeah, man.